Sampath Reddy joins us. Let's take our conversation forward. He represents Bajaj Allianz Life Insurance. Sampath, what's your market view? What should one do? Is it time to take some profits off the table? Is the run-up too much and too quick?
I think we are right now cautiously optimistic. Given that if you see the interest rate movement, overall interest rates have been rather it's taking longer time in terms of peaking of the interest rate cycle. If you look back and see about a year back, most of us were expecting that interest rate would have peaked by March of this calendar year, and by now we would have seen the reduction in the interest rate, but that's not happening. Thanks to the very strong demand in the US and the very strong labor market, overall the GDP growth rate is coming much better, and the consumption demand has also been much better. So because of that, I think interest rate cycle peaking off is taking a little longer time. Because of that, we are seeing overall in the market the value stocks performing better. As you see, the interest rates remain higher and higher levels. I think the growth stocks are getting slightly derated, mainly because for the growth stock, large part of their cash flows comes from the long period of time, where interest rate sensitivity is much longer for them. I think because of that reason, there's been a little bit of shift from the growth-oriented, high growth sectors to the somewhat, I would say, utilities kind of is performing better. I think this trend will continue, given that high interest rate regime will last a little longer. I think we are right now preferring more of a value-oriented stocks as compared to the growth stocks. But in terms of, to answer your question on the overall valuation as such, yes, the overall broader market valuations are slightly on the higher side. I think FY24, if you see, probably 21 times PE, and if you look 1 year ahead, maybe around 19, 20 times kind of a PE multiple, which we are trading at today. I think it's slightly on the higher side. But given that very strong macro for the India as such, relatively we are the one which are doing far better in terms of globally, in terms of GDP growth, and with a very benign inflation. I think the higher rich valuation probably will continue to be there. From a longer term perspective, I think it's better to stay invested, even though valuations currently appears to be on the higher end of the spectrum.
Valuations are on the higher end of the spectrum, but you're cautiously optimistic. Tell me which are the sectors or spaces that you like where you still see value, or where you still see the valuation are at least a bit more reasonable.
I think, the banking as a sector, having a very strong fundamentals now. The NPAs are at a multi-year lows, and the margins are also at a multi-year high. And if you look at the valuations, they are pretty much in line with their long-term averages. So the banking as a sector appears to be very, very good. And also the pharmaceutical sector, which we have been liking for a while, and it looks like now the time is coming right for the pharmaceutical sector. And a lot of news flow that if you see that globally, there has been a increase in the shortage of drugs in the US, and the US generics, which has been a pain point for the most of Indian pharmaceutical companies, seems to have bottoming out there. So that sector also, in terms of most of the pharmaceutical companies, you see the valuations are not very high relative to the valuation that we are seeing in the rest of the other sectors. These two sectors we particularly like. And automobile sector is also doing well, especially in terms of earnings growth wise, largely because of the low base effect. Barring, outside of this also we have, some of the small opportunities where, for example, QSR, which is a sector we've been liking for quite a while, given that its long-term growth potential is very, very robust, irrespective of the valuation which we are there today. I think, that's one good sector from a longer-term investment perspective.
That thought, I wanted to quickly bring on board in terms of UPL, because they have revised their guidance and it's coming downwards quite a bit. They're now guiding for a 1 to 5% growth. Earlier, they were talking about a 6 to 10% growth. And that's the reason that stock is tanking at the moment. In terms of the other guidance that has come in, they are talking about EBITDA growth of 3 to 7%. Earlier, the EBITDA growth was 8 to 12%. So there's a sizable cut in terms of the FY24 guidance for UPL, 1 to 5% of revenue growth versus 6 to 10% earlier, and EBITDA growth of 3 to 7% versus 8 to 12% that they had reported earlier, and that's the reason the stock is a bit volatile, though still holding up in the green. Sampath, just coming back to the conversation, chemicals, is this the space that you even look at? Chemicals, fertilizers, the entire agrarian kind of stocks?
Yeah. Fertilizer sector, we've been liking that. There are some good quality companies, especially companies like Coromandel, Bayer, etc. Some of these companies have got a very high return on equity, and these are the sectors. These are the companies which have been liking. We are not so much, I would say, the chemical or rather export-oriented chemical companies. We have not been, very much, I would say, on top of that. But fertilizer is something which we have been liking. As I mentioned, like pharmaceutical is also the sector we've been, liking overall as an export-oriented theme. These are the sectors which we are preferring in the chemical side.
Why do you like utilities? Utilities do well when interest rates come down or when there is a problem in terms of growth.
No, I think what I was trying to say is that when the interest rates are high, some of the new age companies where the free cash flows tend to be far out into the future. If you discount with the with a little bit of a higher interest rate and higher cost of capital overall, their the valuations tend to come down. Rather, interest rate sensitivity is much higher for the companies where the cash flows are far out, whereas the interest rate sensitivity for the companies which are kind of utilities where the cash flows are more front-ended. Those are the companies generally tend to do well. I think that's probably one of the reasons why I think values are performing in the last few days. I think that's why we've been sort of liking this sector in this junction.
Okay, thanks Sampath for joining us. Appreciate you joining us on the show. Let's